today's part with the following interruption for a public service announcement.
Welcome to the Investing in Intelligence show, where we talk about artificial intelligence, companies, stocks, and trading. I'm James here with my co-host Kai, and today we'll be talking about Applied Digital. So Kai, nice to catch up with you after a couple of weeks here. I think we'll have to probably start recording more time because it's kind of devolved from a weekly podcast to like a twice a month or maybe even once a month podcast. So we probably should go a little bit longer each recording just to make up for the fact that we're not recording as often.
Well, I think we can record more. We've had the holidays, Thanksgiving, obviously it's flu, RSV, all the disease-ridden viruses that are rearing their ugly heads again that comes about with the fall and winter, especially taking the time off like we did for COVID. I feel like over the last year or so, all of like para-influenza has been worse, for example, because of nobody has any immunity to these viruses. But you and I'm feeling pretty good. How are you feeling?
Yeah, I'm feeling good. Haven't gotten sick yet. Looking forward to Christmas. The market has been interesting. So my take, every ticker I go and look at, like I hear about a stock, I go and look at the ticker and it's up 60% or it's up 130%. And I like to toggle. Apple stocks has like the best toggle between time periods. So you like tap 1 month, it shows you the 1 month return. You tap 3 months, it shows you the 3 month return. And I feel like every stock I look at is up somewhere between 60 and 130% over the last few months. It's insane. So my general take is that we've kind of front run the deregulation and a certain amount of stimulus, whether it be tax cuts or other things, but mostly deregulation. So I feel like the market has kind of front run a lot of the returns for 2025. My thoughts are pretty much we're going to have a really nice first 3 months of 2025. And the reason is because we have year over year comps that are very favorable for inflation. What I mean by that is early 2024, the first 3 months had very high inflation rates. That means in 2025, the year over year comparable numbers will look lower. Since it's the year over year change, it'll look pretty low. So I think we have a really bullish first 3 months of the year coming. And after that, I have more concern for scares related to either inflation or growth or labor market.
Right. We'd have to see a change in the data, a change in the wind, so to speak. I do think it's starting to feel like things are a little overbought. But we are in this sort of power trend bull market. Where the 21-day moving average has really stayed above the 50-day moving average, which is good signs, even for stocks. One in particular that I have a pretty large position in is Broadcom, had a pullback below the 50-day and just recently moved above that 50-day moving average with quite a bit of volume on Friday. It was about 5 to 6%, and earnings are just around the corner. But I only have two things, and interesting your thought. I thought one particular factor that may have been a headwind going into December, because we had such a great November, was treasury yields. So you saw treasury yields starting to creep back up, and I mentioned it to you, and I think you were saying you thought they would stay the same, and then they started creeping up to about 4.5. Well, now treasury yields have started to retract. And then the other thing is uncertainty has been basically taken out of them. Since the election, there's been a lot of uncertainties that, when you had multitude of factors, we had geopolitical issues going on, multiple wars, and now we've seen a lot of those starting to calm down, right? Iran was bombing Israel and Israel was bombing Iran. And then all of a sudden you see, ceasefire talks between Hezbollah and Israel. We sort of this feeling just in general that the geopolitical concerns are slowing down. There was like an overwhelming victory in regards to Trump and the Republicans, and so a lot of uncertainty was taken out of the market. And so I think that was one of the biggest headwinds, and now that's just gone. So the next question is really what's ahead of us? And I think a lot of this last earnings season, we didn't see a lot of the big names pop like we saw, but I think the AI story has really told the tale of some of these things have been really good. Some of the earnings of these AI companies have been really, really good. And you could bring up a few of those, but we're going to talk about a company that has a relationship with the largest named AI company, and that's Applied Digital today. But what are your thoughts, just in general, of this last earnings season, James?
Yeah, I think a good last earnings season. So we've had at least four of the stocks that we've covered that have gone parabolic since we last recorded. Pure Storage, one that I owned and we covered briefly previously, gone parabolic. We had, what's the other one I'm missing? The other big one that went, oh, Marvell. Marvell, we did an entire episode on Marvell. It went parabolic. Also, Soundhound, a company that we covered many months ago, went parabolic. I mean, these stocks are up, like I said, in general, between 30 and 130%. We also saw over the last few days, NanoX and AISP, Airship AI, also went way up. So these stocks that we covered earlier in the year have just skyrocketed. Marvell and Pure Storage skyrocketed on good earnings or things they said on the call. But it looks to me like Soundhound is skyrocketing on contracts it's getting. So Soundhound appears to be the real deal. There might have been some question about that earlier in 2024, but they're landing more and more contracts. And by the way, their last earnings beat was a phenomenal earnings beat. So Soundhound has kind of perplexed me. I was owning it in the high single digits, and then it would drop, and I'd say, "Oh, why do I own this thing? It's going to take years for it to work out." And I would sell, and then it would shoot back up. I finally said, I said the same thing I said to Soundhound that I said to Rivian. I just have to buy a stake, and I just have to hold it, and just don't worry about going up or down. It's going to be volatile, but if you believe in a small cap company, you kind of just have to buy some of it and just sit and wait and force yourself to not sell. Now, the one thing I'll just say real quick in closing on your comments on treasury yields, I told you again and again when we were at 4.5, you've got to buy some bond ETFs. And this is what people don't get. If you want an insurance policy on the stock market, if you want a hedge, you do not have your cash in a money market. You do not buy a treasury. You buy bond ETFs. So those have shot up 8% since we were at 4.45 or close to 4.5. You've made 8% just in capital gains on those bond ETFs, not even taking into consideration the 7% per year you're going to get in what we call coupon, just making money every month, or some of them pay out every quarter. So people have got to start looking at, there's so many great ETFs now that are bond ETFs.
Yeah, I mean, that's a great thought. I just think we were very risk on. I mean, look at crypto even during that time. And so you had sort of the treasury yields slowly going up after the election, but people were risk on. And so I think that's something to take a note of. It's sort of a general feeling, a general theme. And so every earnings season, I think, has a general theme with it. The one thing I would say is, the large companies as well as AI is dragging along this market. I think the rest of the market is really weak. I think what we've seen in a wide breadth is that the rest of the market really hasn't really had the growth, and it's only AI that's really driving this market.
No, it's the exact opposite now. So AI has taken a pause. AI has stopped, and the Mag 7 are not leading anymore.
Well, I'd say the Mag 7 had an excellent week this last week. Meta, Amazon, great week. I have a full disclosure of a large position in Amazon, and I cut back some of my position in Meta, but amazing week for the Mag 7. There was only one of those companies that we talk about just in general being kind of in those companies. Tesla, look at Tesla. It was Nvidia. Nvidia was the one that kind of lagged this week. Nvidia did not have the week that, for example, Amazon and Meta did. So I don't know if I agree with you there, James. I would say chip stocks have lagged. Chip stocks have lagged.
Yeah. The Mag 7 is lagged. So NVIDIA, Google, Microsoft, a lot of the Mag 7 is lagged. Tesla, some people say it's not even part of the Mag 7 anymore, but pretty much all I hear on CNBC is about the rotation. So kind of the opposite of what you're saying, that the Mag 7 have lagged. They've underperformed the broader market. We had financials that did well. We've had a lot of things that have really caught up, whereas the Mag 7 have underperformed.
I'm not particularly talking about the stocks in regards to the broadening of the market or RSP broadening. We've seen a full participation in this market. I'm only speaking to earnings. Now, you may have a company like a kava, or there are bright lights in a field of duds, essentially. But I mean, just look at retail, for example. I mean, Kohl's hammered. How Abercrombie and Fitch took a hit because of that. There's been a few bright lights in regards to some of those um, other retail stocks. Target killed. I mean, we had really good. There's always just one or two of them, like Walmart, that is an Amazon, that are sort of shining lights in the particular sector. But I don't think that the market is as strong as everyone is. I think it's really brought along by the build out phase of AI, and we've seen that continually play out. And so that's my particular opinion on it. I'm looking at chip stocks next, because I do think in 2025, 2026, some of the chip stocks are lagging a little bit. Although Taiwan Semi had a really great bounce back, just crossed past the 200. So, yeah, I mean, what are your thoughts on the chip sector, SMH, in regards to that?
I mean, I would say I would say it's terrible. I mean, except for Marvell, the underperformance of the chip stocks in general, and also even AI stocks like ASML has been terrible. I know it's recovered a bit, but it's been terrible compared to the rest of the market, especially since Trump was elected. Nvidia hasn't shown much momentum. I mean, we're at like 140, and we were at 140 months ago. Google, I could mention. Microsoft, I've already mentioned. So a lot of these companies are underperforming, but that's the way that the stock market works. So we rotate in and out of things. I was shocked to see that. I mean, I believe the narrative that was false. That every time we get to this 4.5 on the 10-year, you hear so many commentators saying, "Oh, we're going to 5. Oh, rates are going high. Short bonds, short bonds, short bonds, because it's going to go higher." And guess what? We turn around and go to 4.1. So everything is a trade. Everything is a rotation. You have really smart people who are running some of these narratives. And unfortunately, right now, there is a big narrative about AI is slowing down. The rate of improvement is slowing down. We're not going to get as much out of these models as we thought we were. And guess what? That's just not true. I mean, so often I hear people talking about the LLMs who haven't even tried the latest ChatGPT models. And by the way, they just released a new model. So we were using O1 Preview. They released a full O1, and they've got an O1 Pro, which is $200 a month. And from what I understand, it'll pretty much cook eggs for you in the morning. It can pretty much do anything. Like, for example, if I said, write this book, boom, it'll do it. It might take all night, but when you wake up in the morning, it will have written the book. I mean, it's that powerful. I might be exaggerating a tiny bit because it's in early testing, but
Yeah. Let me ask you a very specific question then, in regards to the rotation, just in general. The growth that we have seen with Nvidia is still is not what it was previously, but still excellent growth, just in comparison to all the other companies. I mean, excellent growth, but it's not 100%, 150% growth. So what are you looking at? I mean, I think what you said was very great there. Nvidia's just kind of been lagging in this 140 area for the last month or so now. We had earnings 3 weeks ago or something. What are you doing? What are you looking in? Are you looking in? Let's just say you have a large position in Nvidia. Are you looking to rotate that money, or are you going to stay the course?
no, I sold some put spreads. They're all doing pretty well. I sold the 130 was the upper put that I sold was the 130, and then the lower leg was like it varied. I sold 3 of them, 115, 110. So I sold a few put spreads and they've done well. They're multi-month put spreads, so I might just hang on. But what I would say is there's a lot of misconceptions on Nvidia. So one of the misconceptions is that Nvidia chips are only for training. They're not for inference. Well, I actually do inference when I do the images that we use for our thumbnails on our YouTube videos. I use pretty much an AI platform that allows you to run inference. And it's funny because they're using old NVIDIA chips for the inference. So there's actually not a better chip for inference than an NVIDIA chip. So there are a lot of misconceptions about NVIDIA. People just don't understand that no one's really replacing them. They're not going anywhere. They're well diversified. They do software in addition to hardware. They even sell the cables to connect their GPUs together. I think NVIDIA is here to stay for quite a while, and people don't need to doubt it. The problem is it's the most valuable company in the world, from what I understand. So how much upside do you really expect to have in the most valuable company in the world? Do you expect it to double in the next year? We can't go from 3 trillion to 6 trillion in a year. It's just not going to happen. So it's unfortunately, once you get to be the most valuable company in the world, your company is going to grow kind of at GDP like rates. Well, I don't want to say that because it's growing a lot faster than that. But you can't expect to have 100% year over year growth when you're already at 3 trillion or 3.4 trillion dollars. It's just not going to happen.
Well, I guess it's just well, the story will yet to be told in regards to watching just sort of new demand for the new Blackwell GPUs as the new generations of these Blackwell GPUs come out, and particularly regarding that, maybe the demand is going to be there. And so, yeah, I was just curious to what you think. I mean, I don't know if you actually gave me an answer. Are you holding for the long term, or are you rotating the money out of Nvidia into something else right now with the rotation?
Yeah, holding for the long term, still a position. Anyone who's investing in AI has to have a long term position in Nvidia. Yeah.
Okay, so you're holding. You're just going to sit that out. Okay, so that's interesting. So let's talk about a company that's related to Nvidia in regards to uses their GPUs, and that's Applied Digital. Tell everybody a little bit about. Tell me a little bit about Applied Digital, and then why you are not investing in Applied Digital.
All right. So Applied Digital, let's just start by how we found out about Applied Digital. You actually messaged me. You found out that NVIDIA had invested. You just messaged me the name, and I went and looked it up and was like, okay, yeah, it sounds like NVIDIA announced that they have invested in Applied Digital.
You and I will do this to each other sometimes. My usually message to you is, hey, check this out. Your message to me is a chart with the particular underlying, and you're missing out. It's one of those two. I'm usually check this out. And James is like, look, hey, by the way, you missed out on this. But Apply Digital was one, and full disclosure out there, basically I like to look through hundreds of charts or just read through different Yahoo Finance. And basically, Apply Digital uses GPUs as well as NVIDIA GPUs, as well as NVIDIA invests in Applied Digital. And during that same time, I also heard, and I can't remember where I heard it. I probably actually heard it on one of the few stocks I heard on Fast Money. It was like the very end. And so I was just like, well, I'm looking through the financials of this company. I'd heard about it. The other thing is I remember a sign for Applied Digital. I lived in Dallas, Texas for a while. And so Applied Digital is in Dallas, Texas. So that was where I first heard about it. But yeah, go ahead and just give everybody sort of what they do and why this is an interesting one.
All right. So just to start off, it's important to understand that you don't buy something just because NVIDIA is investing in it. So NanoX was a big NVIDIA investment. It's down 23% year to date. RXRX, ticker RXRX, which is Recursion Pharmaceutical, was another big NVIDIA investment that came out, shocked the world, shot up. Well, guess what? It's down 33% year to date. So we know that Soundhound is doing really well, and that was an NVIDIA investment. But not every company that NVIDIA invests in is a great buy. There's some kind of circular thing here where NVIDIA is investing in companies that are buying lots of GPUs. I mean, are they actually giving a certain amount of money in order for the company to buy GPUs? I don't know exactly how it works, so I can't say. But NVIDIA is investing in companies that want to purchase NVIDIA's products. That's important to understand, first of all. This particular company was actually a crypto company. So they have rebranded as a general data center, high performance computing data center company, but they were a blockchain company. Actually, they were called Applied Blockchain just not that long ago, and they've renamed to Applied Digital. So their largest customers are still crypto miners, Bitcoin miners. 62% of their revenue is from one customer. They only have two customers. So just anyone who's super bullish on this and says, oh, look, it's high performance computing data centers. They're focusing on AI data centers. No one else is focusing on that. Take a few steps back, realize this company just had a good beat on earnings simply because they got one contract, probably from Microsoft. So they're focusing on North Dakota, South Dakota, mostly North Dakota, which makes sense because it's cooler year round. So you don't need to use as much cooling, as much energy in your data center as you would, let's say, if your data center was in Texas. Also, Doug Burgum, apparently he worked for Microsoft. So that's why we think that their North Dakota, their new data center is actually for Microsoft. Anyways, to break it all down and just kind of summarize what I'm saying here, this company has little to no revenue. They have little to no customers. It's just not. I mean, their margins are negative, so it's not a profitable company. I tried to find their gross margins to give them some credit, but they don't even publish it. They have negative operating and net profit margins, so they're not really making any money. But there's hope that they might sometime in the future. This is a crypto company that rebranded as an AI data center company. Convenient timing. They did it just like last year. Once ChatGPT is picking up. And so far, they've scored what looks like one big contract that's not even fully built yet. The data center isn't even fully built yet. One big contract, probably with Microsoft in North Dakota. So don't get too excited about this one, is what I would say. What I would say. Yeah.
Yeah, I think it's a very interesting little point there in regards to the connection with crypto. And so that's one of the reasons why I also thought I really wanted to hear James's take on one, just data cloud center build out, and then their relationship regarding crypto as well as their history there. And so for our listeners out there, let me get this, if this am I correct, their main source of revenue is basically the data center build out for potentially one of the larger tech companies like Microsoft. And so that's what they do. Obviously, and if you've listened to us in the past, when you build these data centers, it requires, and one of the things you highlighted here, it requires a lot of energy. And so you want to utilize a particular area of the country that is lower cost. And I know you mentioned Dakota, Texas also, Dallas in particular. I mean, yes, it's hot during certain times of the year, but the rest of the time, the temperature can be quite mild year round. So an interesting point there that you mentioned. But I think data center creation and development is very important. And the Blackwell GPUs, I believe it or not, or I think are used for their data center build out. So maybe Nvidia just really believes too, has a little an inside track to understand really what's going on with these Blackwell GPUs and how they may be utilized and the demand that creates. Correct? I mean, that's the way I look at it. And so I have a position in Applied Digital. It is a smaller position. I am long on Applied Digital, but were you excited? You were kind of indifferent. Were you like, oh, hey, yeah, we should talk about this one? I do think it was worth mentioning in regards to AI phase. This is also a build out. This is not one of the end products. I don't believe this is a bust. I think but it's part of the build out phase of AI.
Yeah. So the question is really like, what are they doing and what are they providing? And are they unique, or do they have direct competitors who are doing the same thing? That's a kind of a tricky answer. So you may have heard of Equinix or Digital Realty Trust. The most obvious competitors to look at would be Equinix or Digital Realty Trust. What those companies do, they kind of provide the space for a data center, but then they allow the specific company, whether it be Microsoft or Google or whatever, to come in, bring their own servers. SMCI or Dell can install the servers in their space. And then they kind of provide the infrastructure for that data center. Well, okay, so they're not quite doing that. What about CoreWeave? Is CoreWeave doing the same thing as them? Well, CoreWeave actually doesn't build the building. CoreWeave doesn't bring in the GPUs. CoreWeave is like a buyer of the AI cloud computing and a reseller, I guess you could say. So they don't do exactly what CoreWeave does. They do kind of a little bit of what all of them do. They do a little bit of what Microsoft does, a little bit of what Digital Realty does, a little bit of what CoreWeave does. And from what I heard on their conference call, they're actually selling GPU hours. So they can quote you the price to use an Nvidia GPU for an hour. It's $2.20, they said on their earnings call. By the way, as an aside, it sounds to me like it takes about 2 years for them. If you consider the Nvidia GPU is $40,000, at that rate, if the GPU was running constantly for 2 years, it would take 2 years for them to break even on that purchase of an Nvidia GPU at $220 an hour. So look, here's my concern here. I just don't see margins being great in certain businesses here. And this is why we're rotating right now. This is why everyone is rotated back into software, because we saw the growth in the AI build out, but when we have companies like SMCI and Dell that can't show the margins, we have these chip makers who have just had, analog chip makers who have decreasing revenue, and we don't see a recovery quite yet. People are looking back to software. So that's why you have ServiceNow up so high. That's why you have companies like CRM, Salesforce up so high. I could go on, Snowflake making a huge recovery. that's why the market has rotated back into software, because companies like Applied Digital don't have the margins and they probably never will. Now, Nvidia does because they're the only seller of the product everybody needs, but that's a rare case. A lot of these build out companies just don't make as much money per dollar. They don't keep as much profit per dollar as software companies do. So, I mean, I can give you my final take. Yes, I do have a position, but I sold half of it after my research. So I bought initially when I heard about this investment. And then after I did all this research for this episode, I sold half my position. So technically, when I do my quick take, I will have to say selling because I am selling, but I did initially buy.
You're actually selling, yeah. So are you taking $1,000? Let's just say you have $1,000 laying around, $5,000. Let's just go 1,000. You have $1,000. Are you buying SMCI currently or Applied Digital?
Neither. I like SMCI. I think SMCI could kind of rest around.
It's not a neither question. It's really a if $1,000 you can put it on. You can buy $1,000 of Applied Digital or $1,000 of SMCI. Which one are you going with?
Oof. Wow, that's a tough one. What I will say is, so I mean, I would flip a coin maybe because okay, I guess Applied Digital, but I just think that everything is going to go up with this Trump presidency. I mean, with the massive deregulation, now we've got a crypto czar, David Sachs, who we both love. You know, with the way things have turned out, with them sacking Gary Gensler, they're just cleaning house here. Everything is going up, but certain things have done better. And software, it's important to understand there's a reason why software has made this massive recovery and chips have not over the last 4 to 5 months.
Right. Well, interesting take there. So, yeah, James is basically, he's not a buyer, he's a seller of Applied Digital because he's actually selling Applied Digital right now, full disclosure. No, my price target on Applied Digital is somewhere around 11 and a half. And so when I entered that was my price target. I'm bullish on Applied Digital up until that point. When it gets to 11.5, I'll reassess sort of where we are. As far as its technical setup, it formed this long base really over the course of about a year or two. And so now it's kind of the right side of the base. I think you're going to see a little digestion, but there is something that could, from that point really break out. And so you may see it go to as high as $13 or $14 a share, right? So, there's some upside there, in my opinion. There's some revenue growth as well. Yeah, margins. I'll have to look into really the margins in regards to these in Applied Digital and the data center creation there, and maybe there's something in the contract or whatever with its customers, but to have a customer for example like Microsoft, that may it. So I'm bullish on Applied Digital just because of its potential relationship with Microsoft and the data center potential there. But yeah, so I'm a buyer. James is a seller. We actually diverged in this in our on our opinion here.
All right, so I'll give you my take and then we'll get O1. No longer O1 preview. Finally, ChatGPT O1 preview has graduated and become O1 itself. So I'll give you my take and then we'll get O1's take on this. And I'm not going to give O1 a lot of background information. I believe O1 is still using info from October 2023. And I'm not going to give it any background info. I'm just going to say the only thing I'll tell it is that Nvidia just took a stake. Was I think a 5% stake or three? Would you remember 3%, 5%?
Let me see here. Those holders.
I am bearish on Applied Digital because they are a rebranded crypto company that only has one customer and, okay, I guess two customers. Let me start over. I'm going too hard. I was going too hard. All right, so I am bearish on Applied Digital because it's a rebranded crypto company that has non-existent margins and a long pathway to growth. That's my take. But let's see. Let's see what O1 preview says. I'm going to pull out my AirPod and we'll see.
I am bullish on Applied Digital. Nvidia's stake suggests strong future prospects, with AI-driven demand likely to accelerate their HPC growth trajectory.
Did you hear that?
There you go. Yeah, I mean, Nvidia's stake is 3.65%. So they have near $8 million. 8 million shares. Let's see. Yeah, they have almost 8 million in shares of Applied Digital. So, but they're, you have BlackRock and Vanguard, and Hood River Capital apparently has the most at 13.68 million shares. But I think as far as data center in regards to Microsoft potentially and just AI demand, there could be something there. And so, yeah, so it's not a large position I'm going to hold currently, but again, I like to, and James and I are a little different. I like to come up with a plan. My plan is usually bullish on a stock. I come up with the price target, and then I reassess the data as that goes. So, for example, let me just give an example. Amazon dropped down to near $160 a share. I have a very large position in Amazon, but my price target in Amazon was $235 a share. So right now, Amazon's currently at $227 a share. But it's good to come up with a plan and then try to stick to that plan. So, James, any last thoughts, last words? Good to see you.
Yeah. So a couple things. I mean, it's like, what is your time horizon? Applied Digital might actually be a good company to own if you have that long time horizon. There's been a lot of talk over the past couple weeks on small modular reactor companies. I'm going to name three right now: SMR, New Scale Power, Oklo, which is ticker OKLO, and then BWX Technologies, BWXT, I believe is another one. So you've got these companies that are probably 7 to 8 years off from making these small nuclear reactors that people actually can use for AI. So do you want to invest right now? I mean, it's hard to say. I will say Soundhound was at that point a year ago. And yeah, you did want to invest. A year later, Soundhound is at 13 when it was at 4, 8 months ago. So sometimes you do want to go ahead and invest, even if it's years off from being a top company in its field.
Yeah, I think for me, Applied Digital is not a 3 month story, not a 5 month story, or not a 6 month story. It's more in the 2 year realm, really looking for me. Now, I may take profits depending on when it hits my price target just to see what happens, as well as use technical analysis and data in regards to my decisions. But it's on my watch list. I think this is one that is it going to be on your watch list, James? Are you going to watch this one pretty closely?
Yeah, it's definitely. Well, I mean, I still own a small position, a less than equal weight position in Applied Digital, and I'm going to hold that. I think you have to with how bullish the market is right now. You have to hold some small caps because they've massively outperformed. We've talked about Palantir and Axon, who have been some of our best performing choices over the past year. Now, we got to cover two more quick issues here because these are serious issues that are rearing their heads and they're going to continue. So the first one is these tariffs are looking real, and we're exposed to that. So we need to start looking at what companies do we own that could be impacted by trade escalation with China. Now this might just be a thing where, let's say, because if you think about tariff, okay, so tariff normally makes you think we're going to charge a price to things we import from China. But a lot of the companies that we own are actually selling to China. That's the opposite direction. They're not just importing from China, but rather they're selling to China. So we need to start asking ourselves, what's exposed? Is Micron? Is Lam Research, if you own that? What are the companies? ASML. What companies do we have? Applied Materials. I just named a few that have a significant portion they're selling to China. So, yeah.
Yeah, I mean, you mentioned one. I mean, one that I've followed pretty close is ASML, but I think a lot of the prices for that is already baked into the cake. I mean, and so again, it's coming up with a plan. I mean, my price target for ASML is anywhere from the high 800s to, high 800s, 900 range. And so I think ASML, in regards to the way the stock market is actually at a very good price point. We've seen the MACD indicator cross, the RSI improving. I actually think ASML is one to actually go out and look at. And full disclosure, I have a position in there, in ASML. But I think really in regards to that one, just in particular, that some of that price is already baked into the cake. So I don't know. I mean, I'm going to wait and see. I don't think it's great to really just buy really want to buy the rumor sometimes. I mean, I don't know if I'd necessarily. I'd let this story play out and just follow this closely, but I'm not making any moves right now.
Yeah, the tricky thing is sometimes you let something play out and it hurts you pretty badly. So, for example, ASML sales to China, this is coming from ChatGPT 4.0, which is an earlier model that's internet connected. So, ChatGPT just pulled in the second quarter of 2024, ASML sales to China accounted for 49% of its net sales, which is absolutely massive. So, if you if you have to wonder one of the reasons why ASML has traded down over the past 4 months, that might be one of the reasons. So Applied Materials reported net sales of 10.12 billion from China for fiscal year 2024, making it the company's largest market. That's more than 50% if it's the largest. And Micron has slightly less exposure to China, we're hearing here. So look, so if we have a ratcheting up, we could start to see some of these stocks tank. They could go lower than they have or underperform worse than they have due to some of these issues. Now, the last issue I wanted to talk about. So know your China exposure. That's number one. Just look at the FXE or FXI. I don't remember what it is. We had a huge run up when China started doing this stimulus maybe 1-2 months ago, and it's given all of that back. All these stocks like Pinduoduo, Alibaba, they've all crashed right back down from that high. That's because of the Trump victory and the ratcheting up of tension. So you can see a big sell-off in your China exposed stock. That's one thing that people need to know. If we've recommended it, well, not recommended, but we've said that we're owning it. Keep in mind, China exposure is something we're watching to decide whether or not we're going to, have a full position there, or be buying more, or maybe trimming some. The last thing I'll say is, and this is what I wanted to end with, get your opinion on this. We talked about this previously, and I talked about my concern and my hatred with TikTok. It's kind of a love-hate relationship because I love my addiction to it and how it entertains me. At the same time, sometimes it kind of worries me and sickens me. And a couple personal examples for you. We recently had a video banned from TikTok. So I put up a video, and as you know, Kai, we've been trying to track our P&L to tell people whether or not we're holding ourselves accountable, like allowing the audience to hold us accountable for whether or not we're saying good things or bad things about certain companies. Are we bearish or bullish? Was that a good thing that we were bearish, or a bad thing that we were bearish or bullish? You can do that with the P&L. No one else does that. And I thought it'd be cool to just put the number above our head. Well, TikTok saw that, and apparently they thought we were saying, oh, if you buy this, you're going to make this amount of money. And they banned one of our videos. They took it down. So in the same time, I go on TikTok yesterday just for entertainment. I'm like, I'm just going to watch TikTok for 15 minutes. So I go on TikTok for 15 minutes, and what do I see? I want to show you, Kai, and get your take on this. And let me just go ahead and paint the picture. We've got a picture of the guy who shot the CEO. There's a man talking about the picture of the guy who shot the CEO in New York City. And this is what the narrator is saying about that shooter.
Other insurance companies are already changing their policies. I've never seen anyone of his stature gain this much sympathy instantly. They won't find him. He can knock on any door in the world and people will open up the door and let him in. They will feed him. They will house him. They will hide him. They say true heroes don't wear capes. They wear winter coats with backpacks and face masks. They stride silently 10 feet behind, and then like a silencer, they jog off into the morning to ponder who's next.
This guy is essentially worshiping the killer and elevating the killer of the United Health CEO to a very high position here. And what's crazy is this isn't the only video that TikTok showed me like this. They showed me a couple more on this topic. I didn't search anything, by the way. I wasn't searching for this topic. They just saw I was fascinated by this one, so they start showing me more videos that elevate and worship this murderer, including 2 from Grand Theft Auto, like that kind of reenacted the scene. And then there was one with a hit list of 10. I mean, I'm going to have to put this on screen for the video podcast because you almost can't even believe it's true, but it is true. There was one video on TikTok that was a hit list of 10 CEOs from healthcare companies. There's United Health, and then there's a bunch of other like Humana, other CEOs, and they crossed out the name of the United Health CEO, and then there were like 9 that are still to be killed. And this is This is what doesn't get banned on TikTok. Now, our video where we're trying to hold ourselves accountable for how well we've talked about stocks, that gets banned. But people literally encouraging Americans to kill CEOs of our companies doesn't get banned. It's just out there to encourage more radicalism and murder. So this is why, in my opinion, TikTok needs to get banned. Now, I'm an Oracle holder, and we know that Oracle is 1.5%. Well, let me rephrase that. 1.5% of Oracle's business is TikTok. I don't care. I will take that hit. If it's a 3% hit, a 5% hit, a 10% hit to the stock of Oracle, I will just swallow that. I will take that. We've got to get this app banned. And it looks like Congress just upheld, or rather a court just upheld the ban that Congress has enacted. So we will not be advertising. We will not be paying for any promotions on TikTok over the coming months, partially because it's probably going to get banned in January. But the Trump administration might reverse that. Trump has sounded pretty positive on TikTok. Any thoughts on that, Kai?
Oh, I don't know. I mean, I don't have any particular thoughts. I mean, it is sad that they can glorify a killer. I was actually really sad. I saw a lot of the tweets about the healthcare industry. I mean, this is a broader topic, and I think the thoughts that a lot of people are expressing are coming from a different place. We have a very broken healthcare system. We have a lot of problems with our healthcare system, but I think it's a wrong place to probably be in, where you're cheering on a killer. I don't really know the actual circumstances or events or motive behind. While I think what they're doing is assuming that this person's motive is in regards to a grievance with the health insurance with UNH, but who knows? Maybe it's something else. And so I don't like coming out and
well, all I was gonna say, look, so he wrote 2 words on the shell casings.
Yeah, I just like when any of these things that are emotion moving events that come out, and then a lot of the news is social media, even mainstream news media. I have personal experience where they get the majority of it wrong, especially initially. And I can give you some specific examples off air, but in regards to other events that I have been a part of that have made national news, okay, the little snippets that they will tell is completely different than the actual truth of the story. So I don't know. I don't like to jump to complete conclusions because I think this is a very emotionally charged subject, just like other subjects in the United States, and it can be utilized for views and news and ratings. And so that to me is the sad part. I mean, but I'll wait for a lot. I mean, I'm very interested to find out all the facts on this.
Yeah. And really what I'm commenting on here is TikTok, its ban, and Oracle's exposure, because we're not a political show, we're not a news show. But as far as that's concerned, people must understand this app is bad. I mean, so you will not see, YouTube obviously has its shorts, and we know that Meta has Instagram Reels. You will not see a hit list of US CEOs on either YouTube Shorts or Instagram Reels. Only on TikTok are you going to see that. They have a different standard, and I truly do believe they are sowing discontent. They are sowing social lack of cohesion in America. Okay, they are allowing stuff like this to float around while they're banning our video just for trying to hold our investments, accountable, have accountability to viewers. And you have this hitman who's being glorified, and
Well, I want to make it says people consume news differently in 2024 than they ever have throughout human history. Okay, we consume news differently, and I think a lot of people utilize social media, at least initially, to obtain news. And we wouldn't let Russia come in and basically be able to put what stories are in the New York Times or the LA Times or whatever news agency would it be. So why is it okay that an outside basically power, any other country, has complete control over a social media company for which a lot of Americans consume their news and information? So
yeah, and just to drive my point, the final inch home. Here it is. Here's another video. Once again, I was not searching for anything. I just opened up TikTok, started scrolling. Here it is. here is a video that I saw on TikTok. It says "wanted dead or alive." They crossed out the word "alive" because it's clearly they just want these people dead. First one is CEO Brian Johnson, then Humana's Jim Retkin, then Cigna's David Cordani, then Kaiser Permanente, and it goes down. And they've got a red X over CEO Brian Johnson. So Turtle Island Liberation Front is whoever posted this this video, but so 5,700 likes. That's just the likes. We don't know how many people have actually seen this. This is encouraging, promoting radical extremism, murder, violence against the people who make America great. CEOs, private companies, public companies make America great. And anyone who's watching this podcast understands that and is trying to profit off that by investing. So this needs to go. This app needs to go. And all I'm saying is look for a 10% pullback in Oracle when it finally does go. But Oracle is going to be okay. America is going to be better once this app is gone. And I think Trump probably listens a little bit more to Elon, who owns a social media company, than he does the head of TikTok and all the little TikTok dancers and fans out there. Not to mention other big companies like Meta, which owns Instagram's Reels. They're going to be trying to get their whispers in Trump's ear now. And Meta obviously wants TikTok gone too, so they can have more profit off of Instagram Reels, not to mention YouTube Shorts. So I think TikTok does go. I'm excited for it. I want this out. We have a state in the U.S. that Australia just did a 16-year-old requirement to even use social media. This is the cigarettes of our age, and people don't understand they're smoking. So I'm excited for some of this stuff to go away. Anyways, we can wrap up, and thank you for your comments on that.
Thanks. Talk to you soon.
Yeah. All right. So thank you for watching our show, and we'll be back in the next episode to cover more AI stocks.
The first revolution is when you change your mind about how you look at things and see that there might be another way to look at it that you have not been shown. You will not be able to stay home. You will not be able to plug in, turn on, and pop out. Revolution will not be televised, and be no rerun, brothers and sisters. The revolution will be live.